morning, traders from whichever side of the country, world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Special shout out to Great 876 for being the first one to join the stream via Instagram. Now, quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the market the right way. Now, we have just started a new calendar month and we have a few, actually not a few, we have a lot planned out for you, the traders, and I would want us to look at what we have currently offering. When you go over to our HF bonuses and promotions segment on our website or using the application, we have just launched the Score and Roll, whereby, remember last month we gave away a Mercedes-Benz? Yeah, we do love Germany, and we are giving away a brand new BMW, whereby you have a chance to take home a brand new BMA or score a UK Premier League trip. The competition is going to run from 1st of November, which was last week, Saturday. It's going to end on 28th of February, 2026, whereby you have a chance to win a BMW 2025 4 series, whereby you can redeem your points. So 25 points for one ticket on the Beamer. You have an opportunity to go for a UK Premier League trip of your choice, all expenses paid for 2, whereby there are going to be flights, there are going to be accommodation, match tickets. You redeem 20 points for one ticket. We are going to have 4 winners watching with a 55-inch TV. It's a 4K UHD, 10 points for every one ticket. We are going to have 20 winners going home with official EPL football jerseys. We are going to have 60 people being credited $200 into their accounts. Oh my Lord. All of this, the monthly draw, we're going to have it in the next 25 days, 27 days to be exact, 14 hours and counting. How do you join? You go over to your HF platform, log in, go to the promotion segment, score and draw, then click join the promotion, trade and earn points, allocate them across different draws for exclusive prizes. Not only that, we have just started also a new calendar month, meaning the new virtual to real demo contest has just begun. And number 1, as always, is going to be credited $500. This is going to be risk-free. Number 2, $300. Number 3 is going to be credited $100 on the account. We do have upcoming events. We are going to be in Rift Valley for the entire of November, whereby we are going to start with Naivasha on the 5th and 6th of November at the Lemayan Suits. Click on register now to book your slot in the event section. On the 7th and 8th of November, we are going to be at Amana View Hotel in Nakuru, Kenya, and so many more events are upcoming. If you are not available, then you can join the online classes, whereby you have an opportunity to join us, whereby I'm going to be starting the seminar on the 7th, on the 5th to be exact, of this month, whereby I'm going to take you through market structure-based trading techniques. Click on register now and book your slot once again. Now, moving over to the morning market call, whereby we do have earnings seasons currently ongoing, whereby we do have a few companies, including Ferrari, who are supposed to release their earnings tomorrow, Pfizer, Uber, AIG, AMD, which is very, very big. This is the closest competitor to NVIDIA. We want to see how their earnings is going to come out after market close, whereby we do anticipate their earnings per share to come out at $3.9. Quite interesting. Not only that, we do have BMW also releasing their earnings later on tomorrow, and so many more companies. And we are looking at this information, we're asking ourselves, how can you use this information to make money as a trader? And we are going to look at that. Now, starting off with the economic calendar, there's one thing I need to point out, whereby the DST has just ended, whereby New York session now currently at the moment is going to open at exactly 4 p.m. From last week, prior to last week, the markets did open at exactly 3 p.m. But from today, New York session is going to open from 4 p.m. If I can open a new website here, whereby, as you can see, Frankfurt, Germany now opens at 10, meaning we are just in pre-London, whereby Frankfurt, Germany does open at 10 a.m. It does close at 6 p.m. London is going to open in the next 54 minutes and sun counting at exactly 11 a.m. This is local East African time. New York, once again, is now going to open from 4 p.m. This is going to change the news releases, whereby now we are going to anticipate news releases after 4 p.m. Now, looking at Monday, we don't have a lot of news releases, major impact, except for the CHF, which is the Swiss franc, who are due to release their consumer price index. Now, if you look at it here, it does mention it is going to be at 9:30, but once again, this calendar is going to be 1 hour behind, meaning the data is going to come out at exactly 10:30. As you can see, 23 minutes to go, whereby we were looking at a previous number of 0.2%. We are anticipating inflation to pick up in the Swiss region up to 0.3%. Now, they just did lower their interest rates to flat, whereby their interest rates currently at the moment is 0.0. Quite interesting, noting that if you do borrow $1 million, you are going to pay back $1 million if you were in Switzerland. And we want to look at these inflationary numbers. What does this mean for the Swiss bank? Are they going to increase rates? Are they going to lower rates? But for us as a trader, how are we going to utilize this opportunity? Does it mean we are going to buy the Swiss franc, or are we going to sell the Swiss franc? We are just going to jump onto the chart section in just a moment's time. If we can continue with the day, we do have ISM manufacturing PMI. Now, this is the purchasing managers index, which is due to come out in the next 7 hours, 52 minutes. Now, the government is still yet shut down currently at the moment, but we are receiving data from private entities, but from government websites, government institutions. Currently, at the moment, the government is still yet shut down. Today is day 33 of the shutdown. Only 2 days shy of the longest shutdown that the United States of America has ever been through. Quite interesting, noting how is this going to affect price action in the near future. Now, looking at PMI, this is leading economic data, whereby it looks at how companies, especially in the manufacturing sector, and they ask these people, how do you feel about the relative level of business? Are you guys hiring people? If you have inventory, are you selling the products? Now, the data is usually between 0 and 100, and the data above 50 is seen as the economy expanding. Data below 50 is seen as economy is usually shrinking. Now, we were looking at a previous number of 49.1. We are looking at a consensus of 49.2. The actual number has not yet been released. If it does come out higher than 49.2, it means that the manufacturing sector in the United States basically is expanding if it does come out above the 50 level. Quite interesting, noting how New York session is going to be in the next 7 hours, 51 minutes. Now, we have Bank of Canada, Governor McClellan, who's going to release the speech, and we want to listen from Bank of Canada. What do they have in terms of forward guidance? One of the things about central banks is that they do offer, where they tell us, the traders, the institutions, they tell the economy in generally where they anticipate the markets to head to. If they say that, yes, we do anticipate the economy to generally move in the right direction, it means they are moving in the right direction, meaning you need to look at more buying opportunities on the Canadian dollar. On the other hand, if they say that things are not heading in the right direction, it means that, okay, selling opportunities will be much more attractive on the Canadian dollar. Now, looking at the commitment of traders, as you can see here, it is not applicable currently at the moment as a result of the government shutdown. And last month, we didn't have NFP numbers, and this was quite interesting, whereby when Jerome Powell was speaking last week, he did mention, okay, there's a possibility we might not have interest rate cuts in December as a result of we don't have major data that backs up if they are going to lower rates or they are going to hold the rates where they are currently at the moment. And which is this data? Basically non-farm payroll. And if I can quote what Jerome Powell did mention, he did mention that what do you do if you're driving in fog? You do slow down, and that's where the economy currently is at the moment in the United States of America. They don't have employment data. They don't know if they are going to cut rates. Will it justify what they are doing currently at the moment, or will it undo everything that they have been doing up to this particular moment in time? Now, looking at the Fed Watch tool, this is a website that looks at how the probabilities of the Fed either reducing rates, holding rates, or increasing rates. Now, looking at the next FOMC meeting, this is going to be the final meeting of the year. It's going to come out in the next 37 days. Quite interesting, noting that the statistic Prior to last week, this information was nearly 90%, whereby there was a 90% probability that they are going to reduce rates to 350 to 375 basis points. But currently at the moment, we are seeing the statistics go down after last week's Fed speech. And currently at the moment, we are seeing 30% probability that the Fed might actually hold rates where they are currently at the moment. We have a question from I am Degar for real. Do I need MetaTrader 5 if I want to trade with HFM? I'm having a hard time linking my HFM to MetaTrader 5. No, you don't need MT5 to trade with us. But if you're having a problem linking your HFM to MT5, first of all, ensure that you are using mobile data. And if it does tell you at the bottom when you log in your details, kindly confirm you do have the correct login number, the password, and the server. If it tells you that authorization failed, kindly go back to your HF and change your password. I registered. How do you know I am in? You're going to receive an email from where you did register. We already, Naivasha, waiting for you. Thank you, Tosh254. We are waiting for you too. We have a question. No, that's an answer from Gustavo. We do have a lot of comments. Could the Fed sentiment be affecting crypto's fall? Actually, it could be, and we are going to look at a chart of how the crypto currently at the moment it is faring on towards the end of the video. But currently at the moment, there's a 69.3% chance that we will see interest rates being lowered, but we are seeing the statistic once again pull up to the upper side, whereby we do anticipate from the Fed chair speech last week, he did mention that there's a possibility we are not going to have interest rate cuts in December, which is going to be in the next 37 days and counting. Now, I want to pull up these two candlesticks here. Now, today is the start of the monthly candle, and if I'm looking at the monthly candle here, if I'm anticipating a bullish candle, this is going to be the opening price. I'm anticipating prices to go to the downside, form a low, then start rejecting this low, move to the upper side, form a high, then close. While on the other hand, if I'm anticipating a bearish candle, I'm anticipating prices to open here, move to the upper side to form a high, then a low, finally close. Now, I want us to focus on these specific regions here, whereby during the first few days of the monthly candlestick, this is when we anticipate either the high or the low of the monthly candlestick to form, which is quite interesting for us traders because you need to be very careful with how price action is going to be. Now, we don't anticipate major news releases currently at the moment, which we do anticipate low volatility, meaning we can use tighter stops in our analysis at the moment currently. Now, I want to switch gears to the charts. This is whereby, yeah, we have looked at the theoretical aspect of the markets currently at the moment, and that's good. But it reaches a point whereby now, how do you piece in the gap between fundamental analysis and technical analysis? Yes, we have looked at all of this information, but how do you apply it to the markets? And I want to start with gold, God's money, essentially. Now, for the past 4 days and counting, if I can pull up a measuring tool to where we are currently at the moment, over the past 100 hours of trading, gold basically has been consolidating. Technically, it hasn't been making clear higher highs or clear lower lows. As you can see, prices is in between the 14-period moving average when looking at it on the 1-hour time frame. Now, why is it so? We are looking at the markets holding. Just less boy, welcome, brother. He wants us to look at GU and UJ. We shall look at that. Quite interesting, noting how prices are faring on at the moment. Now, looking at gold. Now, gold is a safe haven, meaning it thrives on uncertainties. But we are looking at the markets currently at the moment, and we shall look at equities in just a few moments' time. Whenever the markets cool down, whenever the markets go back to normal trading conditions, risk on essentially, whereby investors would want to move their money into higher yielding assets. Let's say, for example, AI. We are seeing an uptick in the amount of stocks technically currently at the moment, and we could look at the S&P 500 in relation to gold, whereby on the daily perspective, the S&P 500 has been rallying to the upper side, clearly making highs before this short-term retracement on the monthly candle. Not only on the S&P 500, if you look at the NASDAQ also, when you look at the US 30, we are seeing investors be very confident with AI in the near future. A lot of money is moving into these companies, and it's bearing much more in return because of what? Currently, we are moving to risk on assets. But looking at gold, it does not thrive well when other companies are doing better. Why? Because it's a safe haven. Whenever there is a risk in the market and we are looking at, okay, currently at the moment, China is coming to the table with the United States, deals are coming. India is also coming to the table, whereby there's a lot of deals that will be that will affect how goods and services move in and out of India. We are looking at Russia. Russia have been sanctioned, and I have seen from Limo, you want us to look at, no, it was the Chef 32 who want us to look at UK oil. We shall look at that in just a few moments' time. But looking at gold currently at the moment, we have this massive retracement to the downside. Now, the monthly candle has opened bullish to the upper side, but we want to look at how oncoming data is going to affect the United States. Now, whenever prices consolidate, this is a good sign for us traders. Why? It means that the markets are about to move, and you want to pay close attention to the consolidation. What would happen if the government does open their doors this week and the NFP numbers do come out? What is that going to mean for the markets? Now, looking at it currently at the moment, we do have this wedge forming. I would want to see prices breaking above 40.37 for a further continuation to the upper side. But on the other hand, looking at how prices are constricting to the upper side, buyers are really struggling to break towards this region on the upper side. We are trading above $4,015 an ounce on the precious metal, meaning if you do break below this region, I would consider looking at more selling opportunities, potentially prices coming back to these regions of inefficiencies that we did have last week around 3,888, which is a psychological level when looking at it. Anyasi Chofa is asking, which pair is this? We are looking at gold's money, essentially, and we are looking at potential region of resistance being broken, turning into support above 40.37, while on the other hand, we have this region of support. If it is broken to the downside below 39.64, there's a potential prices moving further to the downside. This is quite a decent amount of range when I'm looking at it. This is almost 750 pips on the market. It's quite decent. If you execute on a 0.01, that's $75, a 0.17, $50, a 1.0, that will be $7,500. Now, these video will be updated to the YouTube channel. If you want to go back in time, look at it, go through it, share the stream as many times as possible. Let's impact people the right way. That will be gold. Looking at silver, trading at $48.8 an ounce. Once again, we saw metals dip to the downside last week as a result of, okay, we are seeing the economy go back to the market, going back to normal trading conditions. And we did see profit taking as a result of this massive move to the upper side. Ever since 9th of April towards that region, we did see prices make higher highs, higher lows. Institutions did buy low. Now, if they bought low and prices appreciated in their favor, they would want to start taking profit. If they do take profit, we do anticipate retracements on the markets. Now, looking at how the monthly candle did close, it just closed slightly above the opening price of the monthly candle. Now, once again, today is going to be the start of the monthly candle. We want to be very, very careful. Looking at it currently at the moment, prices are consolidating. But for us as traders, whenever you see prices consolidating, this is a good sign because it means prices are about to move in the near future. Now, we are looking at $49.3 an ounce. If prices do break this region of resistance, there's a potential of prices moving further to the upper side, potentially coming to $52.704 an ounce. But on the other hand, looking at it, if prices do break to the downside, there's a possibility of $45.6 an ounce in the near future. Now, there was an inquiry about UK oil or Brent oil. Now, we did see OPEC have a few inquiries about, we are heading into winter currently at the moment. And when you look at the European countries, it tends to get colder towards winter, and they need more energy to warm up their houses. There's usually an uptick of demand on oil towards the end of the year, towards winter essentially. And not only that, when you look at Europe in general, before Russia invaded Ukraine, 45% of the energy that Europeans used came from Russia. But when they started the war, they were sanctioned. Currently, at the moment, it's only 12% of energy that Europeans use comes from Russia. And starting January, there are going to be even more sanctions on energy from Russia, meaning there's a possibility demand is going to be affected. Now, where else could they get the oil from? They have to go to the Middle East and other places, which means that there's a possibility demand is going to be higher, meaning prices are going to tick to the upper side on oil prices. Looking at it currently at the moment, we did see prices gap to the upper side ever since Friday's closing price. We are currently trading above the 14-period moving average on UK oil, and if at all prices do come retested, this region fails to close below $65.38 a barrel, I would consider looking at more buying opportunities on oil, potentially prices coming back to $70 a barrel in the near future. That could be a potential target for me in the next few weeks of trading, potentially before the year does end. All of this is going to be dependent on what is going to happen. Now, once again, US did sanction oil from Russia. Now, Russia did export their oil to China and India, but as a result of the new sanctions from the United States, India is not going to buy more oil from Russia as a result of those sanctions. Now, looking at it once again, I do anticipate prices to move to the upper side ever since we had this period of consolidation, ever since Friday, Thursday, Wednesday, and Tuesday. Prices did move to the upper side. We did close higher over the 3 trading day period, and I would consider looking at more net long opportunities once again if prices do tap to the 65.38 but closes above that region. We did have an inquiry about the dollar yen, USD JPY. Now, Takaichi just rolled out a stimulus plan. Once again, we are seeing the markets consolidate, which is good for us traders. Whenever you see the markets consolidate or forming a wedge in the markets, this means that prices are gearing up for something. And once again, this is the start of the monthly candle. I would want to look at how prices are going to react to oncoming data. We are looking at more than 90 billion dollars being added into the Japanese economy as a result of the stimulus program. That's going to be the highest that we have ever seen. If at all that does happen, I do anticipate prices of the dollar yen moving further to the downside. We were looking at this region of resistance last week, whereby it was broken. Prices did close well above that region, and currently at the moment, could we be forming new higher highs, higher lows, a potential higher high, a correction for prices to move further to the upper side. If I can scale out my chart to the daily perspective, looking at where prices could potentially move to in the near future, whereby we had this massive bullish candlestick. This was the final trading candle of last month, and I want to see how prices are going to react if at all we do break above that region, which is exactly at 154.496. If you can just round it off, 154.5, which is a psychological level in the market. If I do have a candlestick that closes well above that region, I would consider looking at more buying opportunities in the markets. While on the other hand, if you do close well below 153.671, I would consider looking at more selling opportunities in the markets. That's going to be for USD against JPY. Let's look at the British pound against the Japanese yen. Where are you, darling? GBP, JPY. There you go. Now, looking at the British pound against the Japanese yen, if I can pull up my economic calendar just once more, we do anticipate Bank of England to come to the table this week and release their monetary policy rates, whereby currently at the moment their interest rates is at 4%. We do anticipate the voting. So it's a 9-member committee, whereby we do anticipate them to vote on where they would want to set the interest rates in the near future. Now, currently at the moment, the consensus is that 6 of the 9 members are voting for to leave the interest rates where they are currently at the moment, whereas on the other hand, we have 3 members who are going to vote. This is a consensus, okay? They have 3 members have a consensus of having an interest rate cut in the near future. Now, it's a 9-member committee once again. the more members that vote on a particular decision, that's usually how it goes. But currently at the moment, we are looking at 6 out of the 9 members voting for holding interest rate where they are currently at the moment. Now, if they do hold interest rates, it means we are anticipating a stronger British pound technically. If they do lower the interest rates, it means we anticipate a weaker. GJ? Oh, sorry. Okay, we are on GJ once again. Then we go over to GU. Thank you for that correction, JSLS boy. Now, looking at it, if they do hold the interest rates, I do anticipate the British pound to be stronger and prices potentially moving further to the upper side. Let's look at GBP USD then. Looking at it on a 1 hour time frame, we have been rallying to the downside. We have seen a strength in the United States dollar over the past few trading sessions as a result of the tech industry, as a result of seeing more money move into the economy. The yields have been doing good. We are seeing tech companies post better than anticipated earnings. The AI industry currently at the moment is at its peak, and the result is we are seeing more strength in the dollar against the British pound. Once again, if they do hold interest rates, we do anticipate a stronger British pound. But if they do lower interest rates later on this week, I do anticipate prices potentially moving further to the downside, potentially breaking 1.30966. If we do break that region, there is a high likelihood prices will continue moving further to the downside. Looking at price action currently at the moment, this is quite interesting, whereby we are seeing prices struggle to break to the upper side. Buyers are really struggling to push these markets to the upper side. Why? Because we are seeing candlesticks that are having longer shadows and smaller bodies. Now, this could mean, yes, the buyers are really once again struggling to push the markets to the upper side. We are seeing signs of sellers coming into the markets. If we do have during London session, which is going to be in the next 32 minutes from now, if London session does move to the downside, whereby we have signs of bears coming into the markets, closing well below 1.31283, I would consider looking at more short opportunities on the British pound against the United States dollar. Whereas on the other hand, we do have a double top currently forming at the moment. This is the region of liquidity, whereby if prices do break 1.31495 and close, keyword here is if it does close above this region, I would consider looking at more net long opportunities on the British pound against the United States dollar. Is there any asset that I have left out? There was UK 100, which is the FTSE. Now, the FTSE did close slightly below. This was towards the end of the month, which is quite anticipated, whereby towards the end of the month, we see profit taking on most of the assets that we usually look at. But currently at the moment, we are not getting candlesticks that are closing well below structure. Now, at the moment, we did gap to the upper side, whereby prices did gap to the upper side slightly. We are having a short-term retracement. This candlestick is going to be very important to us. If it does close above the range, then it means buying opportunities look more enticing compared to selling opportunities if prices do break above 9,767. Whereas on the other hand, if this candlestick closes well below this region, if it does close well below support, then potentially it means sellers could drive these markets potentially to this region at the bottom here at exactly 9,707 region. It's going to be dependent on what's going to happen. Once again, we have just started the new monthly candle, and as a trader, you need to be very careful looking at how the highs and the lows of the monthly candle are going to form. We have Euro USD as the final asset that we are going to look at. Euro against the dollar. Do we have any questions from EA? Now, the Euro USD and GBP USD are positively correlated, meaning if one moves to the downside, there's a potential the other does follow suit. Currently, at the moment, we are seeing prices make lower lows, lower highs, lower lows, lower highs, lower lows. We are having this correction here, whereby this was an impulse move to the downside, whereby prices did have ease moving to the downside, but we are having trouble move to the upper side. This shows us that, yes, sellers are in control over these markets, and potentially I would want to align myself with the trend. The trend is your friend, looking at more shorting opportunities on the European Union against the euro against the United States dollar currently at the moment. Now, we were looking at a few speeches from ECB President Lagarde, who has been speaking a lot for the past 3 weeks, whereby she has noted the European region currently at the moment is not at its best place. We are looking at uncertainties. France is at a political turmoil currently at the moment. Germany is not producing as much as it used to in terms of the manufacturing aspect. We are looking at that region. They are laying off people. Let's say, for example, Volkswagen did lay off almost 30,000 people to last year. Quite interesting, looking at how many people are being laid off because of the uncertainties, because of the economic toughness that the European region currently is looking at the moment. Now, oncoming data is going to be very important. She did mention of how they're trying to stimulate the markets. Remember, for example, France, if France does offer treasuries, bonds, government bills, it is the ECB, the European Central Bank, that usually buys most of these bonds. Now, if the European Central Bank does not buy the bonds, it means that, okay, the markets are not headed in the right direction, and the charts do not lie. This is what we are seeing currently at the moment, whereby a chart of Euro USD currently at the moment is moving down. Why? Because technically speaking, the dollar at this moment is gaining strength against the euro. Now, I would consider once again looking at more short opportunities if prices do breaks below 1.152114. Take a look at CHF JPY. Okay, Swiss franc against the Japanese yen. Do I have it on my chart? So we anticipate, okay, the data has just come out for the Swiss franc currently at the moment. Okay, quite interesting. Let's see how the data has been released. So we were looking at consumer price index for the Swiss franc, whereby, wow, it's actually come out negative. It's actually come out much lower than anticipated at 0.1%. Quite interesting. Let's look at the information, whereby if I do click on that title, okay, it's not yet been updated. But once again, we are seeing consumer price index coming lower than anticipated for the Swiss franc. And looking at the charts, the markets have reacted negatively. Why? Because if the CHF, let's say for example the Swiss franc, it basically looks at how people are buying in that economy. The consumers, are they spending? If the data comes out negative, it means consumers are not spending in the Swiss region, which means there are lesser Swiss francs in circulation. And as a result of this data, we are seeing the markets go to the downside. Quite interesting as a result of the lower data. If this does continue to persist, if this candlestick closes well below this region, I would consider looking at more short opportunities. We do have a region of support forming at around 191.339. Once again, if this candlestick closes well below this region, I would consider looking at more shorting opportunities on the Swiss franc against the Japanese yen. Once again, the trend is to the downside, whereby we did have this high forming, but currently at the moment we are breaking structure. Prices are retracing further to the downside. Potentially prices could move to this next region of interest, which could be 190.504. That's a good keen eye shift 32, looking at the Swiss franc, what has just happened at the moment. And this is the important thing about looking at fundamental news releases. It gives you a guideline. It shows you where price is and where price potentially could be in the near future. If the data does come out high or low, what does this mean for you as a trader? Basically, looking at fundamental analysis is very easy, okay? Just ask yourself, does this mean I need to buy or sell into the markets? Now, I have a document here whereby if you do want, I will share it with you, whereby if you go over to our website, we do have this article. Let me just open it for you. It's going to guide you into looking at how fundamentals. It's redirecting me. Why? Okay, shoot an email to ilkington@hfm.com. I am trying to look at this folder, but it's not opening currently at the moment. So let me see if I can do something about that. It's going to help you look at fundamentals the right way. It's basically the entire document for fundamental analysis. Okay. So let me just pin it here. This is my email, ilkington@hfm. Hit me in that email. I'll send you the entire document for fundamental analysis. If you want a key, if you do have interest in looking at how fundamentals are going to affect price action in the near future, that's going to be it for me. Once again, this video is going to be uploaded to our YouTube channel. Kindly go over to our YouTube channel. We do have a lot of information and a lot of materials for you, the traders. We are going to be in Naivasha. We are going to be in Nakuru. Go over to the education, to the events segment on our website. Once again, Naivasha 5th and 6th of November at the Lemayan Suits. Nakuru, we are going to be there 7th and 8th of November at the Amana View Hotel, and so many more. We are going to have a pit stop tour for Rift Valley. If you are in Rift Valley, this is your time before the markets do close by December. Stay safe, take care of yourself. My name is Ian Joseph, market analyst at HFM. I shall see you when you see me next. Cheers.